Hello and welcome to the Wendell Effect. My name is Brandon Wendell and I'll be your host as I guide you through my view of the markets for this week. And before we get started, just need to remind you, we are not registered broker-dealers or investment advisors. We're going to take a look at this information from an educational standpoint only, not telling you to buy, sell, or hold any particular securities or give any personalized recommendations. There's always risk involved in the markets. Nothing we can do can eliminate the risk. We can try to minimize and control the risk. And we are also not guaranteeing any performance. Past performance, no indication of future results. Again, there's always possibility of loss in the markets. And we're not subject to trading restrictions, so we can have a position in a security or initiate one at a time. So, moving along here, you can go ahead and stay in touch with me if you'd like. You can email me at brandonwendell.cmt@gmail.com. Also, follow me on Twitter, as I do stay pretty active there, putting in my inputs on the markets and following some trade ideas. And of course, please hit the like and subscribe for this video, so that way we can continue to bring you more educational information in the future as well. So, really appreciate that. So for today, we're going to do the same schedule as usual. We'll go into the futures market analysis, starting off with the equity index futures, moving then into energy futures, jumping over into a little bit of sector watch, and then the ETF analysis, as it was very popular and requested again. So that being said, we will kick off for the week of March 12th, which has actually just started as I'm recording this on Sunday evening. We'll take a look at those equity indexes. Now, for the S&P, over the last 15 years, for the month of March and most of April, actually, we're actually relatively bullish. You can see the market does try to rally almost 90% of the time over the last 15 years. The average return has been 4.33%. So very, very bullish this time of year. However, this is not like normal years. So we may be seeing something completely different on the markets this year. Looking at the charts, there we go. On the weekly chart, you can see that we failed when we made new highs. We failed to go into bullish territory and basically had not enough momentum to sustain that. So we're not in a bearish trend. Obviously, we have to have lower highs followed by lower lows. Well, we may end up breaking to a new low first very, very soon if we do take out that 38.22 this week. Now, what happened was on the rallies, we failed to get into bullish territory, which suggested there was more selling pressure that was likely to take us lower. However, we still can't get below 40 on the pullbacks either. So that's basically making us go a bit sideways. So unless we break below 40 as we go to a new low in price, I would expect more choppiness and sideways movement this week and beyond. Dropping down to the daily chart, you can see that we do have a first target that we're very close to, 38.57. That's a first projection from our most recent impulse down, and we are much more bearish here. You can see we tried to rally, couldn't get above 60. We are well below 40, showing plenty of bearish pressure on the daily time frame and smaller, just not so much on the weekly as of yet. If we do continue to push to the downside, 36.95, basically 3,700 is my next target area. Moving on to the 4-hour time frame, we are getting a little bit of a bounce here, and it's not surprising. We came into an area of demand. You notice that buying pressure right here at 38.53 to 38.78. So we're experiencing a retracement, and that's all it's going to be. I doubt we'd be able to take out this high of 40.50 on this retracement. We're more likely to stall out pretty much just under 4,000, I think. We might try to come back up and just bounce off that 4,000 before we go lower. And that's kind of what I'm seeing for Monday, maybe going into Tuesday of this week. Just slight bullishness to hit that high right around 4,000 and then the drop off again to continue selling through the end of the week. Looking at the NASDAQ, it too is relatively bullish for the last 15 years. And once more, from March 12th to April 29th, you see bullish momentum typically with a few exceptions. And this year is probably going to be one of those exceptions as well. So looking at the weekly chart, you can see we are simply retracing right now on our most recent impulse up on the NASDAQ. I'm using the June contracts, by the way, because rollover is Monday. So we should be seeing more volume now on the new contracts, the June versus the March contracts on the equity markets. Anyway, we've got a 50% retracement right here. And once again, we couldn't get into bullish territory, seeing that weakness creeping in. And depending on how strong it gets, we could take out this prior low. Looking at the daily chart, we are confirmed in a bearish trend, and we have been. We've had lower highs and lower lows here for a little while, so we're just continuing on in that bearish trend. As you can see, we tried to make a high, couldn't get above 60 on the RSI, and as we are breaking to a new low, we are just a little above 40, but if that ends up getting a close, a daily close below 40, then I would expect prices to continue to push down and maybe even take out these prior lows for 2023. Now, again, this won't happen this week, but we will see more weakness coming in. This is, in fact, become a little bit of supply. So if we do rally at all, we should find weakness starting to come in around 12,300 on the NASDAQ. Looking at the 4-hour time frame on the NASDAQ, we did bounce off of a Fibonacci projection. You can see we had impulse, correction, and basically impulse all the way down to the 1.618 extension. So lots of bearish pressure right here that's likely to continue to the downside. On to the Dow, you can see that we have a lot of weakness there as well. And, oops, sorry, just bear with me a moment here. There we go. So the Dow is extremely bullish this time of year, but again, this is one of those exceptional years where 93% of the time in the last 15 years, we've had an average return of about 4% to the upside here. So you can see that when we go to the charts, it does not look the same. We had that breakdown, and true to form, normally breakdowns tend to fail. They shake people out. So we had the breakdown, there's the retest, and that was actually the shorting entry on the retest of the trend line, and now it's gone down to about the 50% retracement, but it doesn't look like we're done. We still have lots of bearish activity and are likely to continue to go lower this week. You know, we may go and try to retest the origin of this rally. It won't happen this week, but we could go down to the 61.8% retracement, which is 31,276. Going down to the daily chart, it kind of confirms a little bit that, where you can see we've already gone past our first projection. This is no longer, we did have a retracement up 50% as you see, but we're basically duplicating the previous impulse, likely to hit this 31,812. And that might even happen on Monday or Tuesday at the latest. And after it does hit that target, I would expect a little bit of a bounce before we continue lower. On the 4-hour chart, pretty much same picture. You can see we had impulse down, corrected a little, continuing our impulses down, all pretty much in the same area, about 31,007 to 31,008. So looking at more weakness coming out before we get any kind of a bounce. And then finally, the Russell 2000 here on the weekly chart, you can see we tested this supply zone multiple times, but it's still holding as prices are very choppy, looking like they're trying to move down to the bottom of the range. You know, we tried to hold up a little bit here, going back to the end of December 2022, by not reaching the bottom of the range, but we basically couldn't break out. We just ended up going a little sideways. So, you know, I think we're going to be stuck in the sideways range between 1,700 and 2,000 for a little while to go. That's what it looks like. Dropping down to the daily chart, you can see that we've got our impulse that is continuing and likely to go down to 1,732 as our next target before we get a significant bounce. And that's right near the bottom of the range anyway. So pretty much sideways choppiness is what is likely to happen going through the full summer for the Russell. Going down to the 4-hour time frame, we are getting a little bounce off of 4-hour demand, but this is just going to be a small retracement. Don't expect anything big out of this. It may be setting you up for more shorting opportunities until we reach that low 1,700 to 1,723 area. So moving along, for the week of March 12th, we're going to jump into the energy markets and see what they are possibly going to be doing. Starting off with crude oil, you can see that historically we've been a bit bullish for the next month. March 12th to April 12th, about 2/3 of the time we actually saw a rally. And the average return's been about 1.26%, but really it could be a little bit higher because we had this 1 year that kind of threw everything off. That's it. So looking at the weekly, obviously you see we're just choppy and sideways. So instead of having that bullishness that we would normally expect, we're getting more of a sideways choppy motion going on in crude oil. And we really have almost no momentum, as you see. Going into the daily, you can see that sideways choppiness. We're almost down to the bottom of the chop or sideways move. The bottom is at about 74, just a little under that, and the top is just about 82. And it tightened a little bit. You can see it was based between 73 and 80. So it's kind of going back and forth. Obviously, we should hit the bottom of this range and bounce, go back up. However, you notice, we can't get above 60 as we make these highs. That is very weak. We can go below 40, which also signifies lots of bearish pressure, and it's hinting that we may end up breaking down, but it depends on what happens with the current low that we're forming. You notice we have a green candle making a low right now. We have a higher low and higher high just preceding this candle, and I'm on the daily time frame. So if we get a daily candle after this one where we have higher low and higher high, but the RSI does not go below 40, that could signify that we're going to break out a little bit further as we move up to the high. So instead of stalling out here at about 81, we could go all the way up to about 83 and basically overshoot these previous highs. So if we do that, if we do see a daily candle that gives us higher low and higher high on Monday, Sunday or Monday basically, it'd be the Monday candle. So if we get that higher low and higher high, expect us to continue for the rest of the week to the upside and even break out to about 83. Okay, now if that fails, if we don't do that, then we could just continue to drift a little bit lower, and this market does look kind of weak. I don't see us making new lows. I think that most likely we're going to stall out right around 73 and just kind of go sideways then if we fail to break out to the upside. 4-hour chart, you can see we're just simply retracing. We had a very weak retracement. We've only pulled back 38.2% so far, and there's lots of bearish momentum. So this is suggesting that we may continue to stay low and that we're more likely to break down and go sideways rather than having that rally I was talking about. On to natural gas, you can see that 40% of the time for the next month or so, we had rallies. And that's over the last 15 years. Overall, we're more bearish during this time of year, but not really a huge bearish move. The average return is only a little under 0.5% to the downside. Sorry, my dogs are running around behind me here. Anyway, looking at the charts, obviously we had a little bit of a bounce after a huge sell-off that we've been experiencing in nat gas. Looks like we're just going to go a little bit sideways now. We don't really have a lot of momentum in either direction right at this moment. Going down to the daily chart, you can see that when we pulled back, we failed to get a close above 60, and that's extremely bearish for price. So it was suggesting that that may be the only retracement we get. We're likely to continue to push down, but we're not going to have the same momentum we did before. We're likely to just have a small, gentle slope downwards for the next month. And looking at the 4-hour, well, we did already retrace back up to this area as a supply zone. I would look for new zones to form before I would look for initiating some new shorts. So I don't really have any kind of entry point here. We should continue to push down very cleanly until we hit this 2.163. That's the only real demand that I see nearby. However, as I mentioned, unless you're already in, there's no entry point to get in at any kind of supply yet. So wait for some new ones to form or go down to smaller time frames and look for shorting opportunities until you hit 2.163. Moving on to gasoline, you can see that this one is normally very, very bullish. 73% of the time over the last 15 years, this month has been bullish. Oops. So, looking at the weekly chart, you can see that we are in a slight uptrend, although not very strong. Again, mixed colors of red and green. Even though we're making those highs, we're not doing it very well. Very little momentum on either side. We're just kind of hovering in the middle there with RSI, showing almost no momentum. On the daily chart, we just bounced off of an area of demand. We stayed above 40, so that's telling us that we may actually make it to a new high. So if this momentum continues to pick up a little bit more to the upside, we failed on this head and shoulders, obviously. It was left shoulder, head, right shoulder, failed to break down. So we may actually continue up to this almost 3. It's about 2.9454 as a target from where we are right now. This bullish momentum is picking up. And on the 4-hour time frame, pretty much confirming the same. We bounced off this area of demand, got a couple targets along the way. So if you can find a pullback to a demand zone, perhaps on the 60-minute time frame, there may be some short-term swings that you can play to the upside. And ultimately, again, I would target this 268, 278, and then 294 as my finishing target before we get any kind of significant selling pressure coming in. And finally, heating oil for the energy markets, pretty much sideways as well. Really don't have a lot of momentum and mixed colors. On the daily time frame, we're seeing a little bit more bearishness coming in as we can't get above the supply, even though we've tested it multiple times, and we just don't have any momentum. So looking like we're just going to go a bit sideways here. we may pull back, but not much above this 2.88 area. And as we go down to the 4-hour time frame, there may be a selling opportunity. This is not a great supply zone, but this is a base drop right here, right around 2.8. So there may be an opportunity to get short. And as far as downside targets, I go back to the bigger time frame. I think I got 2.583. Yeah, that was the weekly demand. So there you have it. We've got a possible shorting opportunity on the 4-hour right around this 2.8, targeting 2.53. So look for that as a shorting opportunity on heating oil. But unfortunately, the volatility is very high, so the risk and reward are very high as well. So be careful. Moving on to the stock market analysis, we're going to look at how the stock sectors have been performing, what we might see coming up for the next week. And, the last 6 months, you can see that things have changed quite a bit. We still had some leadership in energy and the industrials. But once again, those last 6 months overall, this is what you see typically when you're at a peak in the market and getting ready for a bear market. That normally means that you're going to see rotation into consumer staples and healthcare. Well, looking at the past month, it's pretty much everything's been weak, but the staples have been holding up a little bit better than everything else. That's what you normally see in a bearish market. So it's pretty much continuing on in that vein of we're in a bear market and we're going to keep seeing a flight to safety for a little while. Moving into the ETFs, as requested, I'm looking at the SPY on the weekly basis. You can see that we had a little bounce off our lows, retraced 50%, and it looks like we're done. We could not get the RSI to move into bullish territory, so prices are continuing to slide. The next target on the fib extension is 336, but I'd prefer to target the demand zone since we have them at 312 and also 263. But I think that there's nothing here really to hold us up until we hit that 312 on the weekly chart. Now, if you go down to smaller time frames, say the daily here, again, we don't really have good demand zones to be able to look and say that's where it's going to bounce. Instead, I'm looking for shorting opportunities and taking profits off where we might get some stalling or a small bounce at these fib extensions, 381 and also 365. NASDAQ, pretty much the same picture. I just went on the daily chart here and projected down. It would initially look like this was simply going to be a retracement of an overall uptrend, but honestly, it's changed. We can't get back up above 60. As soon as we go below 40 here on this pullback, it's all over. We're going to go ahead and project downwards. No demand here. So really, 278 is our first pause point. Ultimately, I'm looking at 263 for downside target going into the next month or so. And because it was requested, TQQQ has also been moving down, and we got an overlap here. It's kind of interesting. The 61.8% could produce a little bit of a bounce. It is the first projection to the downside. So we had impulse, correction, projection, and then it also happened to be a retracement from this move to the upside. Either way, we could get a pretty meaningful bounce here at 2044 for the ETF, but it does look like we're going to continue much lower, especially if we end up closing below 40 on the RSI. We haven't done so yet, but we did see weakness pointing downwards for a momentum, and I think that we're going to keep going down until we hit about 18 here. Looking at the Dow, pretty much very, very weak. Again, we were retracing our overall upward impulse. Really, it's not that much of a retracement anymore. We should probably get rid of that. We're impulsing down, and you can see it. Faster moves to the downside, and we're likely to keep moving down until we hit 304. That's our next demand. There's nothing else here to hold us up. Similar picture here on the Russell. Once again, really that retracement level doesn't mean anything anymore. We've already retraced 78.6% anyway. We're truly impulsing down. And this is a weaker index. Notice we are already below 40 on the dailies on the RSI. So you go back on the diamonds, very, very weak there. NASDAQ hasn't quite hit it yet. It's still holding up. And the S&P, where was it? Well, that actually did. So really everything's showing a lot of weakness, especially the Russell, very, very weak. It's got more momentum than anything else. It is probably the better index to be short. So if you get any kind of bounces, look to re-enter on smaller time frames at areas of supply because the Russell is taking us down. Now, when it goes to the trade ideas, we had a couple that I've already finished, as well as some new ones I'm going to introduce you to as well. CME Group was one we were looking at. We had an 86% follow through to the upside for the last 15 years. As you can see, this was the trade we were watching from February 19th, ending in early March. Unfortunately, this one dropped. It didn't work out. You can see we failed to get above 60, and therefore, when we put in that high, it was kind of the death knell for the trade. It's not going up, so don't try it. Evergy, this was another one we were looking at. This is a very bearish security. It has only gone up 20% of the time over the last, let's see. Sorry, I covered up that one piece of data here. Move this over. Last 15 years. So 80% of the time over the last 15 years, this stock has been going down. And basically, we were looking for it to rally up into supply at 63.10 to 63.68, and it just didn't make it. There's also a little supply zone right here, just above 60. We had drop, base, drop. It too was not able to be tested. So, got to pass on that one. It's already moved down. If it does break out to the upside, I'm not trying to take this short anymore because we've been in that area very close to it twice. It's going to be very, very weak. It's not likely to hold. So, crossing that one off the list. CF, this was one we were looking at for a shorting opportunity. Obviously, it hit the entry point right here back in February, and now we've hit target one. So congratulations if you're able to take that trade, because it did make it down to target number one, and there's a new opportunity if you missed, which is really nice. This is still likely to continue to move down. The new opportunity is right here. You can sell potentially at 82.80, and this is on the daily time frame of CF, with the stop loss pretty much at 85.05. That's where I put it, just above the top of the zone. So again, looking to short 82.80, stop at about 82.05. Target number one is actually Fibonacci projection down here, looking to get out at 73.58 inside that area of demand because we've already hit target one. And then target two, the next projection just above the second demand zone is 62.65. So that's what I'm looking for CF as a new trade opportunity. Next we have, what is this? Oh, why is that unleaded gasoline there? Not sure why. Anyway, SNPS, this was a trade that we had to abandon, unfortunately, because we came in and broke the zone. It has gone back into the zone again. I am still not looking to take this trade, so cancel this opportunity. It's going to break that zone. We've already tested it. We can wait and see what happens when we get down to the next level, 333, but honestly, I think the trend's changing at this point. Schlumberger was another trade opportunity. Hopefully you were able to take this one. It was an entry way back in mid-February, as you can see. We got into that trade, hit target one right away. We have finally, on Friday, hit target number two. So patience pays, and it made it down to the second target. RSG, Republic Services, was another trade opportunity we were looking for. We're still waiting for it to come into the entry point. So unfortunately, you got to pay attention to that RSI. If the RSI is below 40 as we come into demand, demand will not stand. So I do not go long. So keep an eye out for that. We are on the 4-hour time frame waiting for price to hit demand, but it's got to come in quick so it bounces out and it doesn't take the RSI with a close below 40. So if that happens, do not take the long. But if we're above 40 on the RSI, as price comes into that demand zone, then look for the long entry. You got the targets marked there as well. Citigroup is a new trade idea. Look at this one. Over the last 10 years, from March 13th to April 6th, 90% of the time this thing has dropped. And the average rate of return is 5 and almost 0.25%. That's a huge potential profit here on Citigroup. So looking at the charts, we're playing the seasonal to find the opportunity, but to actually fine tune the entry here, we have a couple of supply zones on the 4-hour time frame. We have 50.30 to 50.82 as the first one. We have drop base, drop supply with target number one, 47.02, target two, just basically $45. You may want to get out just above that. I know I put it there at the Fibonacci extension, but may need to get out before the whole number. Now, we'll keep an eye on this because since we have two zones, I only enter the lower zone if I have confirmation that's working. So since I have two zones, if you want to just do a set and forget type of entry where you put in a limit order, only do that at 52.05, the upper zone. If you're looking to enter the lower zone, you got to do a little bit of work. I wait till prices go into the zone and take the entry as it leaves, or as I see it turning around inside the zone. So got to wait for a little more confirmation because we don't know which zone is going to work. So Again, look for confirmation inside the lower zone for the short entry, or do a limit order at the upper zone with the stop loss beyond. And I've got 3 targets here. They are Fibonacci extensions or projections, whatever you want to call them. And the third one actually is just above a demand zone as well. All right, you like that one too, Lucy? Okay. Got the doggy approval. And next, we got CBOE, also a short opportunity over the last 10 years. 90% of the time, this has gone down with almost 3% rate of return. So another high-quality opportunity. And looking at the CBOE on the daily chart this time, we have an area of supply that we can look for. So we've got this drop-based drop from 126.18 to 127.61. Place that stop loss just above at 127.80. And we've got the untested portion of demand at 114.17 as target number 1, with target number 2 just below at 110.90. So that's pretty much it, and those are the trade ideas for this week. If you got any questions, of course, shoot me an email, and you can hit me up at brandonwendell.cmt@gmail.com. Follow me, please, on Twitter. That way you can stay in touch with me on a regular basis and get ideas as well. And if you wouldn't mind, please hit that like as well as subscribe to the Wendell Effect here on YouTube, so that way I'll be able to continue to bring you this information on a long-term basis. Until next time, everyone, trade safe, trade well, take care. Thank you for being here.